Today on the CEO Barbecue, we're looking for gold and uranium in Canada's Saskatchewan, as well as copper porphyries in Mexico, together with Fortune Bay. If you want a bullet point summary of this conversation and all the other CEO barbecues in your inbox once a week, go to researchtalks.com and subscribe to our free newsletter. Now, the company you're about to hear from has paid us for the production of this video, which means that this is not research, it's an advertisement, and you should treat it as such. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. And please only watch this if you absolutely know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, and my business sells content-producing services, which also makes me biased in multiple ways. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital might be at risk. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Fortune Bay is listed as FOR, so that's FOR on the TSX Ventures Exchange, where the average 3-month volume is about 25,000 shares. The stock's 52-week high is 87 cents and its 52-week low is 20 cents. With a market cap of just over 47 million Canadian dollars and just over 58 million shares outstanding, today this is an 81 cent stock with a 50 and a 200-day moving average at respectively 65 and 46 cents, which means the stock is now trading well above both of them. Moving on to the share structure, insiders here are noted as owning about 17% of the company. Again, just over 58 million shares are outstanding, and there's 9.3 million warrants as well as 3.8 million options, bringing the number of fully diluted shares to 71.2 million, meaning an increase of about 22.5% in shares outstanding could happen if all the dilutive securities get exercised, which would then result in about an 18% ownership dilution if, and that's always a big but if all dilutive securities actually get exercised. And of course, none of this accounts for potential share issuance down the road, which is not unlikely given that this is a pre-revenue company that operates in what is a very capital-intensive industry. Talking about capital, I'll now go through their latest financial statement, which shows me the numbers as of June 30, 2025. At the time, the company had in total about 2 million Canadian dollars in current assets, mostly in the form of cash and cash equivalents to the tune of $1.7 million, as well as some restricted cash and some marketable securities in the form of 2.6 million shares of Aero Energy, today valued at about $65,000. In terms of liabilities, the current liability side of the balance sheet had about $550,000 on it, and there's also no long-term debt on this balance sheet that I could see. Moving on to the P&L for the 6 months that ended on June 30, the total amount recorded as operating expenses shows up as $562,000, but that includes just over $102,000 of share-based compensation, as well as some depreciations, all of which are, of course, non-cash expenses, leaving the actual out-of-pocket cost at 458,000 Canadian dollars for that 6-month period. So that's an average of about $76,000 a month. Again, specifically for that 6-month period ending on June 30 this year. The biggest chunk of that expense were at the time the salaries combined with the consulting and professional fees, which were represented about 60% of the spend. That might change though, because although the marketing cost for that period was low, I did see that Fortune Bay has signed a couple of marketing contracts, and of course they're paying for this video as well. So we'll talk about that later on in the conversation. Exploration expenditures here get capitalized, so we'll have to go to note 6 of the financials, where the additions for the period show up as $574,000 or an average of about $95,000 a month. That would put Fortune Bay at an exploration to administration ratio of about 1.25, which means that about 55% of the money spent during that period was spent on exploration, and so 45% on administration. Worth pointing out, though, the company also got about $73,000 as operator fee recovery, and Aero Energy also put about $685,000 into Fortune Bay's partner projects. And we'll talk about that, of course, later on as well. As always, though, I would like to remind you, be cautious out there. Your capital is at risk. Please visit setterplus.ca, where you're going to find the company's full financials and double check my numbers, because I could be making mistakes, and specifically pay attention to their full year financials once they're available. Enough accounting for now, though, because I've got a brief overview of the company here. And ultimately, the story of Fortune Bay is one of gold, but also somewhat uranium. And I say gold first because they have a 100% owned gold asset in northern Saskatchewan. It's called Goldfields, where a 2022 open pit PEA calculated at $1,650 gold showed an after-tax NPV5 of $285 million and a 35% IRR following a $234 million initial capex, resulting in a payback of 1.7 years and an LOM of 8.3 years, for a total production of 835,000 ounces of gold. Now, I'm kind of running through these numbers because they might not matter much longer after September, because an updated PEA is scheduled to be completed by the end of this month. And that, of course, will be part of the conversation today as well. But it also promises to show economics based on an optimized scope and development timeline. And of course, the gold price is way, way different than it was in 2022. Permitting, communities, weather, metallurgy, and everything else in between, a lot of other things are hopefully going to be part of the conversation later on as well. Then there's the Poma Rosa project. It's located in the Chiapas state in Mexico. This is a copper gold project. Well, it's actually technically now a gold project. It is also 100% owned and containing a historic gold resource on it, showing 1.7 million ounces, of which a million was at 1.8 grams, and then 700,000 ounces was at about a gram per ton in inferred. But again, this is a historical estimate, and the company will try to renew that. We'll talk about that, of course. So historically, drilling has been focused on the gold part. That's why I said it's technically a gold project, but Fortune Bay has or wants to go chasing the copper gold porphyry that they believe is buried underground here, since nobody went looking for that system before, and there's no significant work that's been done on the project since 2009. So they're currently they're talking to the locals here, really, in order to hopefully gain approval and then go and do some field work. And of course, that will definitely be part of the conversation. That's the gold and a little bit of the copper story here, if you will. And then the uranium portion of the story is in the Athabasca Basin, or in Saskatchewan as well, specifically in the Athabasca Basin. So back to the north, where Fortune Bay has 3 100% owned properties, 2 of which are optioned to Aero Energy, which I alluded to earlier. And then there's another property along the Grise River Shear Zone. It's also 100% owned, but also optioned out to New Horizons. And both of those option agreements are operated by Fortune Bay for a 10% management fee. More about the structure of those agreements and the uranium exploration plans for this year later on in the conversation as well. But for this to actually become a conversation, I will have to shut up already. And Dale, I'll give you the word here. But first of all, thank you so much for sitting down with me today.
Yeah, thanks, Antonio. Thanks very much for having us.
Pleasure's mine. And since this is your first time on the barbecue, we'll have to go through the smell test first. But just before we kick that off and start talking about the basics, going a bit further, maybe in my intro here, there's 2 very different commodities that you're after here, or maybe potentially 3 here with the copper. But there's 3 different geologies essentially that we're talking about here in 2 different parts of the world, very different as well. How do you deal with all of that as a relatively small startup without letting it dilute your focus from the main goal here?
I think it's really important to note we are a gold-focused company. In Saskatchewan, we have the gold resource at Goldfields, just over 1.2 million ounces. And then if you go down to Mexico, it's primarily a gold project with 1.7 million ounces in historical resources there, as you mentioned. So we are gold-focused, and that's where we're allocating our company's spend. The uranium assets were something we picked up during a difficult period in the market through low-cost acquisitions. So those were just staking with a view to farming those out. Obviously, we also bullish on uranium. It's a great commodity to be in as a junior and have some experience in that commodity. So we saw some clear opportunities to create some additional upside for our shareholders by staking those projects and then having them partner funded, which is non-dilutive. But our focus is squarely on our gold assets at the moment, Saskatchewan and Mexico. Obviously, in Mexico, offering an additional upside opportunity there with respect to that porphyry system that would likely be a gold-copper system.
Mm-hmm. Well, that's a neat summary, and I will touch upon a lot of the things that you said here. Well, hopefully, in all of them, um, but we'll put that aside for now because the barbecue is at temperature, and we'll have to kick off the smell test. I'll start off with yourself, Dale, as the CEO of the company. Who are you, and why do you think you're the right man for the job?
Yeah, I'm a South African by background. You probably picked up the accent. Some people confuse me with Australian. But yeah, I'm a geologist. I've got a master's degree in exploration geology, about just over about 25 years of experience in the mining sector. Starting my career with Goldfields, so a lot of gold experience there. Where I was a Goldfields person, worked across gold projects, exploration and development projects. Then transitioned into a consulting contracting group and really worked across the commodity spectrum, but in Africa as well as Canada. That led to a lot of gold work in West Africa, in places like Zimbabwe, and then worked through different commodity projects, eventually onto the uranium side in Namibia, and that led to an opportunity to make my way over to Canada about just over 10 years, about 12 years ago, where I joined Denison Mines. Shortly after joining, I became the VP Exploration, and there was a incredible time with the team there where we made some significant discoveries. Obviously, Denison's a development well in the development phases now, looking to build a mine and has done extremely well. But those years were foundational for Denison in the discovery phases, and it wasn't just on the exploration side; it was also on the development side, where I got well versed in developing projects in Saskatchewan and with the communities in Saskatchewan. So the reason why I'm the right man for the job at Fortune Bay is really the combination of my gold experience as well as the development experiences in Saskatchewan, and really having a strong technical background, but obviously working in executive management roles over the last 10 years.
What did you like better, working in Canada or Africa? I guess you're a little biased though there, but still.
Yeah, both, I enjoy travel, I enjoy being outdoors, I enjoy kicking over rocks still, although more of my time is spent behind the desk these days. But Africa offers some really unique experiences, and Canada, those two just very different. But I think the key thing is, Africa does expose you to a lot of jurisdictional risks, which in this job with Fortune is very important. Mexico has its challenges at the moment. We're not afraid to admit that. And that's really important in terms of how you take responsibles or take projects forward responsibly, and how you deal with the community. So I think it's important to have that diverse set of experiences, because they all culminate in being better positioned for the job. And, I think beyond myself, I think we have a team that's really well suited to what we're doing in Fortune Bay, focusing on advancing our gold assets, but also having these partner funded uranium projects where we can offer technical expertise.
Well, the Mexico side of the story is, of course, interesting, and we'll get to talking about the locals there as well as the government with everything that's going on a little bit later on. Going back to yourself here, though, do you currently hold any other executive positions or board positions with other companies?
I have one board position with a company called Antler Gold, which has gold projects in Namibia.
Is that taking up any of your time, or how do you split your time?
No, not significantly. Antler Gold is really part of sort of our broader group of companies, which is all links back to Wade Dorr, who's the executive chairman of Fortune Bay, and we've got Antler Gold in there, E-Tech Resources, another company focused in Namibia on a rare earth element project, and then as well as Fortune Bay. So it's a group that's quite tightly knit, and also shares some office costs in Halifax, where our corporate office is, allowing us to really streamline our G&A and not be too heavy. Our mandate's really to be lean and mean, and put the money into the ground.
Well, Wade, who you're mentioning here, he's your exec chairman. I believe he owns a large chunk of that 17% insider ownership that I mentioned. What about yourself? What percentage of the company do you personally own?
I have just over 1% of the company, but obviously incentivized through stock options as well. I've put some of my own money into the company, buying shares when I joined, and participating in several of our financings over the years. So obviously I've got skin in the game to the level I can afford as a family man, and still paying a mortgage.
What is that 1%? Is that all shares you've bought kind of in the open market, or the exercise of options, stuff like that, or is that part of it is founder shares or something like that?
No, that's shares are bought through various private placements that Fortune Bay has completed.
Right. What do you think is the average cost of those shares?
Around 65 cents.
Okay. Essentially, what I'm checking for here is whether there's 1 cent papers, something like that. What about Wade? Again, he's one of your directors. I think he owns 15% of the company in total. Any idea of how much of his own skin he's put in the game?
Yeah, I mean, he's participated in all the placements. He's normally takes funds the company, takes a large position in those private placements. So he's a big believer. He's had the Fortune base since 2014 and been very patient with his assets. Watched the capital structure, put in money over time to keep the company going. And now's the time. We're really excited about where things are going, where the gold market is, and we've aligned these assets for the cycle and ready to execute.
Talk to me a little bit more about the board here. That's always something that's not discussed enough out there, in my opinion. And those are the people essentially running the company. So who's on your board? Have they made money for shareholders before?
Yeah, we've got a really well-balanced, experienced board. Obviously Wade is on the board. We've spoken about him, extensive capital markets experience. We also have Michael Gross, a strong capital markets background. He's actually in the medical profession, but has always, founded or participated in venture capital companies. Rick Gill, he's very strong on the community side. He has a company called Strategic Concepts that's been involved with community engagement consultation, very involved with Voisey's Bay during the discovery and development phases. He brings a lot to the table in that regard. Then we have Bob Shaw, who's really a key board member. He's also a technical advisor for the company. He's been involved with numerous junior companies over the years, but eventually joining Anglo American in South America, where he actually put together the properties in Colombia that Anglo took over, and where 40 million ounces of gold was discovered. And that's largely credited to Bob Shaw's work. So he's very involved on the technical side with me. He lives close to me, and obviously going to be also a key part of our exploration plans going forward, particularly in Mexico. And then we have Melinda Lee on the very strong on the governance and accounting side, lending a lot of support to our CFO, Sarah Oliver. So overall, a very well balanced board, and I think a board that's well suited to executing on the projects where they sit at the moment.
And they're how hands on are they really? I think a lot of times where I'm coming from with that question, Dale, is that a lot of times board members are really there to just sit pretty in the presentation. How is that for you? How active are they with you?
Yeah, no, our board is active. It comes in waves where needed, right? When there's a community issue, Rick's on hand. If it's capital markets, Wade's involved. If it's governance, financial, Melinda, and then on the technical side, Bob Shaw has probably the most active role in the company, working alongside me on technical aspects and bigger picture decisions for the company. So yeah, an active board and great team to work with.
So it's you and Bob who point the rigs, essentially.
That's right, and work closely with obviously Gareth Garlick, our VP Technical Services. Bob's more, high level. The day-to-day decisions get made, between Gareth and myself, and Gareth's just a tremendous asset to the company. Just so well versed across the mining cycle from exploration to development, strong in resource estimation. So between us, I think it's a good complement. Gareth, I've worked with for probably 20 years of my career, going back to days in Africa. So we work extremely well together and efficient as a lean, small team that can get a lot done.
Yeah, it'd be good if we can get them on camera as well. Going to do a meet the team type of episode, if you will. Just sit down with you and Bob and Garrett and talk rocks maybe next time as well. That'd be a good idea. I'm writing it down. Do any of them or any other of the insiders personally own a royalty on any of the projects that you have?
No.
Okay. That's the right answer. Do any insiders or board or executives or whoever provide services to the company outside of your regular management and consulting activities? I'm talking about camp, drilling, helicopters, or something else like that.
Yeah, absolutely not.
Okay. That's an even better answer than just no.
I know how that goes sometimes, so no.
Well, still on the same topic and still within our smell test, talking about incentives here and specifically 2025 incentives, given that you're planning an updated PEA and a bunch of other things, kicking off potentially exploration down in
Yeah.
Mexico, across the portfolio as well with uranium. How are you going to measure success internally? And specifically, why I'm asking that is because I'm trying to better understand how executive and director compensation is going to be determined to reflect that potential success and what your KPIs are for determining it.
Yeah, we've got a number of catalysts we identified on our gold projects a while ago, and it's really about executing on those in the short term and then longer term catalysts as well. So there's numerous, my option package, a lot of it is milestone driven in terms of reaching certain targets along the path for the projects. And then, the directors and obviously management are incentivized through largely options. We also have a smallish DSU plan. So that's really where, the company, the executives can participate. But, be very clear, it's all through incentives. In 5 years since joining Fortune Bay, we've never taken a cash bonus for management. We had a reasonable start in 2020, a bit of excitement, but as you know, the market's been tough over the last 5 years, and it's just not in our nature to take cash off the table when the company's not performing well. And it's only in very unlikely scenarios we perhaps would pay those types of cash bonuses. So it's all incentive driven to get the share price higher. When shareholders make money, then after that, management should also be able to participate in that success through the hard work that we do day to day.
Well, but Dale, this is Canada. You're supposed to recognize a bull market and then give yourself a bunch of cash bonuses for your stock price going up on the back of the bull market. Isn't that how it works?
Yeah, not yet. And so now we want to, really realize those gains, solidify the company, get some volume going on our stock. You can get more widely recognized in the market. We're still largely under the radar. So the time will come, and the belief is there that we will, as we work through the catalyst, we will demonstrate the value of these projects. We'll build real value. And when that real value is there and we can start to, monetize assets or through certain transactions, that's the time when management should benefit, not before that.
Totally agree with that. And I only said that half jokingly. Unfortunately, it is half jokingly because it happens with a lot of the companies out there in a different manner. But you're bringing up interesting points. This is really where it gets interesting, or even more interesting, because it might be a good segue to talk about specifically about the business plan here. Going back to what you talked about at the beginning there, but do you see yourself maybe morphing into a developer with a prospect generator side to it, or do you have different plans for the next 3 to 5 years?
Our primary goal is to build value, for our shareholders. Our team is built to for that steepest part of the Lassonde curve, and for the listeners who are not sure what that is, it's how the value of a project, a successful project, changes over time through discovery, early development, or discovery, resource definition, early development. And obviously, that steepest part of the curve is through the discovery phases. So that's, where we focus as a company and where we built to execute upon that curve. So we designed to go take projects through discovery, resource definition, early development, and then we'll look to potentially monetize the assets. That's not to say we will never mine a project. Of course, companies can evolve and transform into organizations that can build mines if the opportunity is right. But where we sit at the moment, we have a lean, mean team built to execute on the discovery, the resource definition, and the early development phases. And that's where our focus is going to be over the next while too, and really by building value for our shareholders on a per share basis.
Do you think that this updated PEA is what could actually start unlocking some of that value on the Goldfields project? Is that what's going to potentially make it more appealing to a potential buyer? And is that really the plan for it?
Yeah, that's right. We need to. It's a robust development project. It checks pretty much all the boxes in terms of something that can become a near-term development. So we really focused on working through those different catalysts, and yeah.
What would a gold asset in northern Saskatchewan, and I'm kind of emphasizing on it because you don't see that often. I mean, you think about gold, you maybe think about other parts of Canada. So, what would a gold asset in northern Saskatchewan have to look like in order for it to actually be interesting enough to be taken out?
Yeah, gold, it's a little bit of an unusual one. Firstly, the gold potential in Saskatchewan is largely unrealized, I think. It hasn't seen the level of exploration as you'd get in certainly Ontario and Quebec and places like that. So I think there's a lot of potential in Saskatchewan. What's key about where we are is it's a robust development asset with lots of exploration upside, but it's in a historical mining area. That it's in the Uranium City area where there's been numerous uranium mines over time. There's infrastructure there. There's a community that also understands mining. So although it's in the Saskatchewan context, it's still checking a lot of boxes for a development, and obviously lots of potential still to be realized in broader Saskatchewan.
Mm-hmm. Well, what about the size and grade profile here? That's what I mean when I ask, like, what does an asset like that look like? Because again, of its location, and this is also where you talk to me maybe about infrastructure and topography and other stuff that might influence capex and opex. So what does that? Yeah, what does an asset up there look like?
Well, our asset is, it's to be frank, it's not a large asset, but it's a 1.2 million ounce project that's amenable to open pit mining, the grades of which are among the highest in North America. It has, very simple metallurgy. It's got one of the best, if not the best, strip ratio I've seen amongst projects in Canada. It's got infrastructure in place. It's got a community that understands mining. It's got an existing EIS approval from 2008 from the previous owner. So the permitting is well advanced. So it's checking a lot of boxes there for near-term development, even though it doesn't have it's 1.2 million ounces now. But I think it's really important to point out there are numerous other targets on the project. So our plan is really to demonstrate the current project's economic potential in today's terms, and then start to advance that forward through additional de-risking development plus exploration on numerous other targets to show the growth potential of the asset.
What about potential suitors up there? I mean, not every. As you said, it's not a large asset, so maybe we talk about. And again, this is all forward looking and potentially and all that, but
yeah, sure.
Mid tiers. Who's the potential mid tier that would be comfortable with operating up there, and who would this asset fit with best?
Yeah, well, we've got SSR mining up there. He has the CB Santoy mine there in Saskatchewan. Got a presence there. That's an important asset for them. Outside of that, there's no other large scale or mid scale gold mining operations. So there's certainly that's obviously a potential suitor for the project. But I think if you look more broadly across the Canadian landscape, and obviously being a better jurisdiction, there's very few projects around that are going to meet the criteria for the next phase of gold mines. And this project certainly checks a lot of boxes. Sure, not for a major company, but for intermediate to smaller scale miner would be a good fit. And being in Saskatchewan is a huge plus. It's gold. They deal with uranium mines which are far more complex. So the permitting side on the gold is very favorable. And being in Saskatchewan, it's Canada's top-ranked jurisdiction, is another real attribute for the project.
I do want to talk about permitting because I think that's something you note on as well that you're currently in the process of dealing with. So we'll get to it in a minute, but might be worth talking about the history of the asset as well. Again, going back to what you just said, it's not the first gold jurisdiction you think about when you think of gold in Canada. So this may open up a bit of a broader perspective, but I know it's worked on before. Who's looked at it before you did, and why did they leave? What did they find?
Yeah, it's got quite a long history. It goes back to World War II era where there's a small underground mine on our main deposit, which is the box. That's about 80% of the project's resources, and they mined only about 60,000 ounces from an underground mining operation. Frankly, the gold grades there, they're high for open pits, around 1.5 gram a ton, but obviously going underground on grades like that would have been somewhat challenging. They anticipate the grade to be a little bit higher, but also, the reasons for that mine shutting down after that 60,000 ounce was produced was really labor shortages related to World War II era. So it shut down, and the deposit, really remained dormant for a long period of time. And wasn't until the late sort of the 1990s where it got reinvigorated by a company called GLR, Greater Illinois Resources, and they took that box deposit. Well, they consolidated the box and the Thona deposits into a single project. So Thona is the smaller deposit, around 20% of the resources. They consolidated that and they did a focused study on the box deposit, and at the same time had it permitted for a 5,000 ton per day milling operation and an open pit development at the box. What happened there is they took out some debt. You know, it wasn't particularly well managed, and they ran out of money through the early development phases, and then it sat dormant, and that's where our predecessor company, Linear Gold, which was run by Wade Dorr, picked the asset up for relatively nominal amounts, and then really just held the asset till the right cycle appeared. And I believe all the assets don't always get the recognition they need, but you need to look at the fundamentals, and the fundamentals are all there for this project. And in this gold price environment, it's got all it needs for a near-term development here. So every asset has its time, and I believe this is the time for Goldfields, and I think our PEA results will demonstrate that.
I like the full overview there. It's kind of like when my wife asked me a question about economics, I'm like, okay, I'll take you back to 1650 in the Netherlands. And then we start talking, then I can rant on for 2 hours. And then it's actually, it'll be a good idea to do a deep dive on the asset as well. At one point, you did mention though the community relations up there. How many groups are you dealing with, and what are you allowed to do under the current structure?
Yeah, so although it has that previous approved EIS, during that time, the duty to consult with local communities wasn't a strong emphasis. So that work is lacking. So we've embarked on that process now, and we'll actually have our first round of community meetings later this year. And it's it's an ideal situation in a lot of respects. I've worked all over Saskatchewan with Denison on other projects further to the south, but up in the north, there's a single representative group which provides a one window to consultation, and they represent all the municipalities and the First Nation communities in that area. So our efforts can really be channeled through this one window to kick off the duty to consult process.
Well, talk to me maybe a little bit more about that EIS from 2008, I believe, on the project. You're going to need a new assessment to address stuff like footprint changes, et cetera. I assume. What is it exactly that you're going to have to do, or what are the questions that I suppose the government and the communities are asking you that you will have to comply with?
Yeah, so that EIS covered a smaller development just at the box deposit. It's still valid today, so one technically could execute on that. You'd need to refresh some of the data, the baseline data, the environmental data, to show that nothing has changed from 2008 till today and that the conditions remain much the same. So it's something we could act on. However, that didn't include mining of a Thona. It included a much smaller pit. It did not include a tailings facility that is needed to reach a higher gold recovery for the project. So what we've done is really optimize the project as a larger scale development, and then using the existing permit to build upon that, to basically amend the permit to enable the development of a larger scale project that would produce better economics.
Mm-hmm. When do you think, or how long do you think that process is going to take?
I'm reluctant to provide exact timelines now because we're in the initial stages of actually starting that baseline work for the project, and that's going to inform how much additional work is needed once we've spoken to the regulators, which we're planning to do later this year or early next year. But having an existing permit obviously does streamline that pathway, and there's a lot of existing data we can use. We just need to verify, validate that data. So we're not looking at a typical full process, as it were. We're going to be building upon an existing data set and likely keeping all that permitting in province. And that's a very important thing for us, is the timeline to development on this asset. We're obviously in a good gold price environment, and we really want to expedite that timeline. So both the community and the environmental work, that is the critical path, we believe. That might be who knows, maybe it's 3 years. But that is, that's the longest lead time item to get to construction. The engineering work in terms of PFS, FS, we believe that can be accommodated easily in that timeline, largely because our PA is based at the moment on 99% indicated resources. So we don't need to spend a lot of money. We don't need to do a lot of drilling and assaying, which is very time consuming. And we have a lot of historical data sets that are still valid from previous studies that we can integrate into studies going forward. So it's all about kickstarting that community relations, the environmental permitting, getting that process started, and then we can follow through with the engineering in parallel and bring this forward to a construction decision as soon as possible, with the likelihood of keeping everything in province.
An EIS in 2 years sounds optimistic, though. You think about Canada, or you hear about Canada a lot in the news, especially when it's about open pit mining, and you see these long lead items that are, sometimes can drag on for many, many years. What are you basing that on? Why do you think it can happen in 2 years?
Yeah, there are precedents, elsewhere in, Manitoba, Alamos's project, where we've looked at permitting timelines. Obviously, we have spoken to regulators before when we did the initial 2022 PEA. So this, as I said, I'm reluctant to provide a firm timeline. So I'm just giving some broad guidance based on what we know now and of the existing data sets, and some broader guidance from regulators, and keeping the permitting process in province. But we'll only be able to commit to a more realistic timeline once we've got the initial phase of baseline data done, and we've spoken to regulators about the project, which is optimized from our 2022 PEA. So those sort of timelines we'll be able to firm up on, but we don't see this as a long lead time type project, given the existing data and given the fact it's being kept in Saskatchewan.
So bottom line, you still think that open pit mining in Saskatchewan is doable, it's permittable, it's buildable, it can actually happen?
Absolutely. If you look at on the uranium side, there's been numerous open pits over the years. There's nothing in the Saskatchewan Mining Act that suggests otherwise. Obviously, it's a responsible province. You need to behave responsibly, mine responsibly, and obviously that would, our objectives will be to set the project up for that. But there's nothing that is outside or abnormal about an open pit project in Saskatchewan.
Are there any legacy liabilities on Goldfields now, community relations that got hit or something like that with some of the previous operator or anything like that?
Yeah, that's a good question. There's some legacy infrastructure on the project in terms of the old head frame, mill frame. There's some underground adits. There's a few waste rock piles. There's an old tailings that sits just adjacent to Box in what they call Vic Lake. And that was from, all from the World War II era exploration development and the bit of mining that was done. Now, it's important to note that none of that liability rests with Fortune Bay. That liability was handed over to the province. I think it was back in around 2008. And the province has that under its what they call Project Cleans, which is a federally funded program to clean up old mine sites in northern Saskatchewan. And that program's been active across a lot of the uranium mines. Goldfields is on the list to have a government-funded remediation of certain sites, but obviously we're talking to government because should we and when this project is developed, naturally a lot of those legacy impacts get taken care of. So it's none of it rests with Fortune Bay, that liability, in short.
Well, so you're not worried about the locals or infrastructure or the EIS permitting process. You said metallurgy simple. What are you worried about? What do you think is the biggest challenge or risk for the Goldfields project specifically right now?
People ask me this question all the time, like, what's wrong with the asset? And, there's frankly nothing wrong with the asset. People say it's been around a long time, but what does that matter when the gold price has gone up so much? If you look back to our 2022 PA, and we'll obviously have a new updated one coming up shortly. I mean, that's done by Ausenco, a very leading Canadian group that does a lot of projects, has had numerous studies done on before. There's really been nothing identified as a flaw for this project. The one question that does come up a bit as well, it's close to the shore of Lake Athabasca. What about water inflows and things? But all the data collected previously, including the geotech, the piezometer surveys, the water surveys, nothing suggests like potential inflows into open pits. And in fact, the historical mining that went underground below lake level never reported any flooding. And there's comprehensive reports for that work that was done then. So we're really not seeing any real risks here. There's normal risks for any mining project in terms of financing. There's some technical, operational. The project is fairly remote, but it would be very standard for a northern Saskatchewan like fly in, fly out type operation. There's access to the project through, it is on the shore of Lake Athos through an ice road and barging facilities. As Uranium said, is a great airport. It's got a town that has existing infrastructure, community that understands mining. So it really checks all the boxes. It is a far northern project, but in Saskatchewan, that's where the mines are. CB, Santoy. If you look how they operate, also with the ice road, also sort of fly in, fly out. It's a very similar scenario, as well as all the uranium mines, which I've been to over the years with my time at Denison. So I don't really see any risks outside of those normal to a development project in a good jurisdiction.
No national parks though, or endangered daisies and mosquitoes?
No, none whatsoever. We've obviously got to confirm that. There's nothing recognized in the previous EIS, but we'll be doing that baseline work again now. And we've actually got cameras set up in the field now, and this guy's busy with aquatic work. So confirming all that and figuring out exactly how that permitting will take shape and the timeline, etc. But nothing being recognized historically there, no.
I guess your field crew would wish that the mosquitoes were endangered because it means there was less of them. I've heard there's quite a few.
Especially Gareth, because he likes he's always got a bug net on him. He doesn't like the bugs.
Well, I spent some time in BC around a lake this year, and the mosquitoes were just, I've never seen something like that. I never even assumed it could be like that. And apparently they're worse in Saskatchewan.
Oh yeah, no, the bugs are quite something to contend with during those summer months.
Well, you'll be back soon, I hope, and so we can do that deep dive on the project, and maybe right in time after the PA, so we can talk more about Goldfields at that time. Let's maybe switch the focus here a little bit to a warmer place and hopefully one with fewer bugs. Mexico, the Mexican asset Poma Rosa. I think I'm saying that right. What's the plan there? What's the goal for that asset?
Well, that's a really unique asset in an exceptional geological setting. And, the word world class gets thrown around a lot and very loosely in this industry. But, if you can take a look at our corporate deck and just even through Google Earth, see the setting of this project where you have this subduction of an aseismic ridge beneath the North American plate, giving rise to this huge porphyry center on which our project sits. And that setting is very analogous to Bingham Canyon. It's analogous to Cascabel, Cobra Panama. It's a really unique, exceptional setting. Why we're excited about it, we've got a historical gold resource there. And that resource sits in the cover rocks to the porphyry system. So it's shallow. There's 1.7 million ounces there. There's the ability to expand that. But there's also numerous other targets in this shallow cover rocks. And these are all these epithermal systems that sit above the porphyry. So there's not only the potential to expand the gold resource, we have to first obviously get that historical resource into current, but to expand the gold resources in the epithermal systems in the cover rocks, and then start to target the copper, which has never been done before in this large porphyry system that is really a lookalike for Bingham Canyon. So it's an exceptional project. If you talk to technical guys who roam the Americas, they generally know about it because it is quite exceptional.
Well, and that is something that it does get thrown around a lot, right? Tier one potential, world-class assets and stuff like that. And then you compare it to Bingham Canyon, which is one of the largest copper mines out there. Where's that coming from? Where's that comparison coming from? What is the and we might do a deep dive on this asset separately as well. Probably take us a couple of hours to go through it, really, because there's a lot. I had a look. But what is it that you see specifically from the geological perspective that makes it a comparable to Bingham Canyon?
Yeah, it's really the broader tectonic setting. These large or giant mineralized porphyry systems generally form where there's been the subduction of oceanic ridge or these oceanic plateaus beneath the continental plates. And if you really have to look at our corporate deck to know what I'm talking about. But if you scan down the western seaboard of North America from Bingham Canyon, which is the Mendocino, called the Mendocino fracture zone that subducts below the North American plate, and you scan down that western seaboard of North America, if you look for the next big aseismic ridge, it's called the Tehuantepec Ridge, and where that goes below the North American plate in southern Mexico, there's a singular bullseye anomaly evidence in the regional magnetics for Chiapas State, which is where the project is, and that's where our concession sits. So that's what I'm talking about in terms of the broader regional setting. In terms of the details of being analogous to that, you've got to get into the more detailed geology. The porphyry system hasn't been looked at. It's all been these epithermal systems, the gold to date. But it's really those details that, so maybe the statement shouldn't be misinterpreted as being exactly like it. I'm talking specifically in terms of the broader geological context and setting from a more tectonic setting, but obviously the details of which have to be fleshed out. Obviously, there is an age difference. The porphyry system we're looking at is much younger. So there's those types of things. And obviously the rocks themselves, the sequences into which the porphyries intruded are somewhat different. But where we are, we have these carbonate rocks and evaporitic rocks, which are really highly favorable for these mineralizing systems to precipitate out the gold and copper. So it certainly, checks the boxes, but it's conceptual at this stage. The setting is there, but the concept needs to be tested. And we do know, outside of the gold that sits in the cover rocks, the question is, what is this porphyry system? Does it have copper potential? And you can see copper in the broader system. I mean, there's holes there, at Cerro Lamina, for example, a 600-meter hole from surface at 0.8% copper equivalent, and it ends in mineralization. We have another hole around 72 meters that's about a 1% copper equivalent. These are holes that have probed a little deeper, maybe found the right fracture zones or the right structural settings to test that, but really hasn't been looked at because all the historical exploration was just drilled off soil geochemistry. There were so many good gold anomalies just in soil. They just drilled the soil anomalies and found Campamento early on, 1.7 million ounces. Kinross had an option. They focused on really another prospect called Cerro Lamina, which was also a soil anomaly. That's where they got that copper hole. So it's been really superficial related. But if you look at analogies like you can look at NGX and Filo in South America, and people are starting to draw these 2 kilometer type holes at 0.1% to 0.5% copper equivalents. I mean, this is the future of copper mining, bulk underground bulk tonnage type mining. So we've got a setting there that needs to be tested, but that's the conceptual, really exciting blue sky part of the project. The near-term catalyst can come from Campamento. There's this large historical resource there, 1.7 million ounces that can grow, plus numerous other gold targets to be evaluated. And then at the same time, we can start to probe a little deeper into this porphyry system. So it offers a lot of, exploration upside on that project.
Those are good graphics, actually, that you're mentioning. They started, I think, page 18, and we'll put those up on the screen for people watching so they can see. But they're that good that even I can understand them. So that's already telling you a lot. I don't know if you did them yourself, but they are good. And it's interesting to look at. I'm glad that you're touching up upon the age of the rocks as well. That's an important thing, difference that you made there. What about the and you're bringing up Kinross as well, history of this asset as well. They operated as well as Linear back in 2004, drilled quite a lot too, right? Almost 100,000, well, almost 90,000 meters really. But, focus on the gold stuff. They didn't have this thesis and that you have now, and they ended up leaving. How come?
Yeah, and that's a key question, Antonio, and we're not scared to, talk about that. The community side, firstly, Chiapas is not a well-known mining state. It's plain to see, And on the community side, there have been some challenges in the past. And it's important to understand those challenges because when Linear, our predecessor, operated that project, they had a community manager down there. He lived there. He was very in touch with the community. There were like any project, there's small things from time to time, but overall, Linear was successfully able to do lots of exploration. You just mentioned the amount of drilling that was done there through the discovery delineation phase of Campamento, the testing of other targets. There was a good foundation there of relationship. Kinross did come in later and ran the community relation a little different. It was after that period where the project was halted and wasn't worked since. What we've done here now to restart to reactivate the project, we've engaged with that same community manager who's gone on to do some really good work throughout Mexico, but he's leading our efforts there with the community to re-engage, rebuild the relationships. Obviously, leadership has changed a bit, and we've got the promise of like a real new start to the project. But that is, we still need to get there, and everything has gone, per our press releases, all the discussions with the community have gone exceptionally well. There's been, strong support. It obviously takes time to work through the community, allow them the space and time to have their meetings. We've provided all the information, everything needed, but we've also taken this time to really build a strong foundation, for the project through getting to know us and getting to know exactly what we're going to do. So we believe in the near term, we will be able to move forward with that project. It's something we're working on, but the community side, it's worth it, and it's going to take, we'll have community managers there, and we want to build that real relationship, not just through exploration, but also beyond. But it's really important to, put that foundation in place, to be able to get the project started.
It's getting me thinking about why hasn't anybody thought to look at the porphyry potential here since then, though, because no significant work since 2009. Porphyries have been all the rage since forever. Oh, it looks like it, not really forever, but definitely the last couple of decades. How come?
Alluded to it earlier. It was really just, it's such a target-rich environment, this project. When they did the soil sampling, which was the first phase of work, some stream sediment sampling, they did the soil sampling, and there was areas there with a gram a ton gold in soils. We were just slam dunk targets, no geophysics needed. Let's just drill these, and off they went. It became the immediate focus, and because the results were good from the drilling. I mean, there's a hole there, 100 meters at 12 gram a ton gold in Campamento. I mean, back in the day, Linear went to market cap over, I think it was 2004, 2005 to over $200 million. So there was so much focus on expanding the gold resources, testing new targets. They simply didn't step back and look at the bigger picture. There was just the low-hanging fruit to really go after, which was on surface. But the setting is there for some deeper exploration, and obviously, it will require a little bit of stepping back, some geophysics to better understand the broader porphyry system, and then actually targeting that with drilling. So it really was a case of being gold focused and the low-hanging fruit, which, Linear Gold and Kinross Gold, both gold companies, focused on without considering the real copper gold angle.
What do you think is the size potential now with this thesis that you have, though? Or again, thinking about it from the perspective of size, what does an asset have to look like in this part of Mexico in order for it to be, feasible, either as you building it out or finding a potential suitor for it?
Yeah, I think it's really exciting when you kind of start to look at the project in terms of size potential. And I'm not going to speak to any particular numbers here other than the historical resource, which is 1.7 million ounce of gold. But that deposit is open in areas, so there's potential to grow that. There's also Sierra Lamina, where Kinross did enough drilling. We've had a QP review the data as part of our data review, and we spoke about that in our press release. But the QP we're planning to use, they said no additional drilling is needed to produce an inferred resource from Sierra Lamina. So that'll be a maiden inferred resource for that prospect without any drilling. We'll need to do some check samples. So we've got 1.7 million ounce at Campamento. We got Sierra Lamina. Some of those drill results are in our tech report. People can take a look. Plus, there's all these other targets that were drilled on soils but never had a solid geological understanding. So we believe we can systematically work through these to build up that resource or increase it from the historical 1.7 now that will be converted to currents hopefully by the end of the year. And then we'll be able to build up that gold resource. So you're looking at a project that, I'm sure will go in excess of, don't quote me, but 2 million ounces. And then there's a lot of blue sky there just on the gold side. And then we still got to tap into the porphyry. So it's got a lot of potential. Yes, it's got, the community side needs, well, needs the right approach in that. But if you look at we always look at things in terms of risk reward. The reward there is large. So obviously we're going to deploy capital carefully and do that and build that relationship. And as it builds, deploy more capital and align all the stakeholders. And the support to date's been great. So we really see the potential to develop this into a real significant asset in North America.
Well, you bring up again an interesting point there, because I'm thinking, is it really asset dependent though, or do you think that the market would only give you or recognize that value for this asset, and that majors or mid-tiers, whoever, would potentially only get interested in it if and when the political situation with regards to mining in Mexico as a whole gets resolved? And I understand it's mostly focus on open pit mining, what's happening in Mexico right now, but it's still got the stigma on it. And I still see the Mexico discount, if you will, to Mexico only focused companies.
Yeah, we can't deny there's been some headwinds in Mexico lately. I think on the ground there are things turning the corner a bit and looking more positive. Certainly from the information we've received, we've obviously seen Alamos get an approval for a pit expansion. There's a lot of open pit projects in the works there. But firstly, we haven't decided how we plan to mine that yet. But I think in terms of some of those, or I shouldn't say how we plan to mine it, but if it were to become a mine, we're not sure. We've got to look at all of that. But in terms of, being able to work there and get on with what we need to do now, the exploration, we've got what they call an amparo, an injunction that's been successful that basically protects the rights we were granted under that original concession. So, we have the ability to move our asset forward at the moment through exploration phases and per our plans. It will require obviously getting the right environmental permits for drilling, etc. We've already spoken to the federal officer for the area, and he said he would support that. We've had indications from the community that they're supportive, and so everything does seem to align. It's always a bit, it is compared to Canada, it's more work, but it's the prize is big. So we see it as a suitable place to advance, and really excited to get the exploration started.
What does work look like when you're talking about the community in this case? Is it going out and doing consultations? Are you organized? What does that really look like? What does community work look like on the ground?
Yeah, community, it's really it's meetings, consultations with the communities, from leadership groups to broader groups, providing information sessions, talking about the project, the company, what we plan to do, providing educational pieces around that. So it's from meeting to meeting with leaders and advancing at each step of the way to you gain the necessary support, understanding, and importantly, comfort. I think communities need to feel comfortable, having companies working there. They own the surface rights. We have the mineral rights, and it's really a case of reaching that mutually beneficial agreement to allow exploration to advance.
How sensitive is this part of Mexico from an ESG perspective? And I don't mean ESG in the sort of the cliche way that gets thrown around a lot, but actual, again, conversations with locals, but also the water rights, the access rights, agriculture, wildlife, and so on. Things that could actually slow you down if they were not, checked off. How is Chiapas relative to other parts of Mexico?
Yeah, we haven't got into all the weeds on that there, but there's a number of development projects underway there on various fronts. There's not many mining projects, as we know, but there are some that have been successful more recently than ours on the exploration side. But overall, I think the political landscape there is important in terms of, we were down at the new governor's inauguration in December. We were invited, and there's really a strong drive by the new governor to, stamp out crime, improve the investment landscape, particularly for foreign companies. And he's, what we've seen today and really delivering on that. I mean, recently, Chiapas announced that it's it's on based on homicide rates, it's the second safest state in Mexico. And we're seeing, I've spoken to numerous other people who have actually reached out to me and said, "Hey, you've got a project in Chiapas. What's it like?" It's on people's radars, and there's a strong support from the governor. On our particular project, we've had support from a congresswoman who's would like to see investment come into Chiapas. So there's a drive on at the moment to see become more investment friendly for these types of projects. It's obviously, also an attractive state for tourism and things, but it's, I really see it being positive, and the ability to invest there and have, in a stable sense under the trajectory of the province.
How is it from a security and cartel perspective? I suppose that's something you hear about in a
Yeah,
lot.
it's a good and valid question. I was quite I knew very little about the project when I first went down there, and I had these questions myself. And been down there maybe 5 times, and I've got to say, like, one gets the sense it's what it is. It's really safe. Where our project is, it's very strongly community orientated, and the communities are very proud. They're clean. They're some of the poorest in Mexico, but they're very proud people who need respect, but like to, so they almost self-police that area in terms of bad elements. And they're really, I've had no exposure to any narco elements at all within our project area. There are some down near the border with Guatemala, but we in the northern part of Chiapas, a long way from there. But even those, the reports and statistics indicate those are being dealt with through, a really firm approach by the new governor.
I would love to do a deep dive on this asset too, and I'm sure we will once you have some news coming in from it in the future. Hopefully, when do you think that will be? By the way, some news from Poma Rosa. When are you expecting that?
Yeah, it's hard to put an exact timeline on that. Our engagement with the community, is positive. It's supportive. It's all moving in the right direction. It's on track. We would like to start some exploration later this year. That is contingent on those meetings going to track. You've got to, as I said, you've got to give the community the space and time. But we've built that broad foundation of support now with the community. They know us. They know what we want to do. I think there's a good level of understanding of who we are and our plans. So, I expect over the next while, there's a good possibility we're able to get the agreement in place and then be able to advance on exploration later this year.
Well, good. That would be a good time to catch up and do a deep dive on this asset as well. This looks interesting. I want to move on to the uranium part of the story, though, in that case, and similarly to the other projects that we'll talk about, Alaska, but your plans, goals, and aspirations with the assets, because again, they're being advanced by partners. What's really the plan here? What's your sort of 3 to 5 year outlook for these 3 assets?
Yeah, so we're really positive about those assets. It's been a really good part of our broader strategy in terms of, when we were during a bit of a lull period, after, we had a nice run up in 2020 when the gold price moved and our stock did as well. But, post that, the market conditions have been a little difficult, but it was a key entry time into uranium where we picked up some really nice opportunities. We spent a bit of money on those where needed, we felt, to get them moving in the right direction, but recognized we didn't want to blow up our very tight capital structure on spending a lot of money on what is quite risky, more grassroots type exploration. So we took the view, let's manage our risk as best as we can for shareholders. Let's, we can, now is a perfect cycle to start advancing our gold assets, but let's have these earlier stage uranium assets. Let's get them partner funded, retain upside for shareholders, but also generate some revenues for those that covered a large portion of our G&A through a difficult period and was very effective in terms of not diluting shareholders much, being able to basically not dilute against the gold assets, which we can now move on in this right cycle. So to answer your question, which will be a long way around, at Mermac and Strike, we've last year we had a really nice intersection, and it was a fairly narrow intersection, but the assay sample of 13% U3O8. And I think it's important to note, like the model we're using there is for these high grade basement hosted uranium deposits. And ironically, or serendipitously, they've never actually been tested in that area because the uranium mines in the Uranium City area were all in granites. They're the Beaver Lodge style. And that what the focus was during exploration at that time, was looking in the granites, which typically outcrop. But the graphitic rocks, which we want to chase, sit in the valleys, and they were never drilled. There was a few drill holes, but never tested properly. And we've gone out with this concept to test those, and we're starting to get the right results. In other words, we've shown these are fertile systems. They have structures, they have the grade, and it's really a case of now doing some more evaluation. And we have a fantastic set of targets. Through Mermac and Strike, we'll actually be drilling three of those. We'll be drilling those some targets at Mermac in the next month, and then the Woods projects, which. So in summary, there's Mermac and Strike that are optioned with Aero Energy, and then the Woods is really a portfolio of projects. There's five projects there, 40,000 hectares across a very underexplored shear zone on the rim of the basin, which has a lot of uranium occurrences. It's got the highest lake sediment anomalies in Saskatchewan on the uranium side. It looks really prospective, but there's 3 drill holes across this entire block of tenements that we've got. So really excited to work with, guys I know well through an Australian group that's, likely to IPO next year called New Horizon. They've also got projects in Sweden. They're a good group to have them sort of run with that. We'll provide some technical input on the Athabasca geology, and let's let that project go. We'll retain some upside. We'll generate some operator fees. We also generate some fees through rental of our Uranium City assets. Helps moderate the G&A, limit dilution for shareholders. And while those are running, the uranium assets partner funded, slightly higher risk, we focus on the less riskier assets where we can really execute on that steep part of the Lassonde curve, where we have drill targets near resources and the ability to expand resources and do early development work to really unlock value on those gold assets, which will be self-fund while letting partner-funded assets run as well. So we feel like we're in a really good position. We've limited downside risk for shareholders, but have a lot of upside in terms of the near-term catalysts that we're going to be executing on for our gold projects.
If I'm getting it correctly, no desire to spin them out or do anything else with them in the meantime?
The gold assets?
No, the uranium assets.
No, we'll retain our, we've obviously got some upside there in terms of retained equity. They're option agreements at the moment, so there's still spend needed before they get to a point where a JV will be formed, and then we'll have the ability to either elect to fund or dilute on those, and that's obviously will be dependent on results and how we decide to allocate our capital at that point in time.
And all the assets that you told me about, they're all work ready, essentially, as in permitting, communities, infrastructure, is all that taken care of?
Absolutely, yeah. So that's, that we've got 3-year drill permits on all those uranium projects. The drilling is obviously happening at Mermac this fall, and then in the Woods projects, we currently busy with a very extensive VTEM magnetics and radiometric survey. And some prospecting work planned for this fall, and then next year we'll likely to see some drilling done at the Woods projects, which, as I said, has virtually seen no drilling to date.
If any of the partners, for whatever reason, although I understand that's not your expectation, but any of them decide to back out of or stop spending money essentially on it and kind of back out of the option agreement there, where does that leave you with those assets, and what would the plan be in that case? Would you look for new partners or just let them sit, or what are you planning?
Yeah, I think we'd look for new partners. I think that there's a tremendous amount of targets on there, and there is money still flowing to Athabasca Basin. So I foresee possibility to bring in other partners to fund the exploration. Of course, we can also sit on the assets. There's been enough expenditures incurred, certainly at Strike and Mermac, to hold them, for a good 20 years or so. and the woods will get some expenditures done there. So it will buy us time to hold the assets but I suspect we would look for additional partners unless there's, we will be always opportunistic as a company. So if we see the clear potential for sort of a lower risk exploration to realize some significant upside, there's a possibility we could fund that. But I think we'd largely stick to our model of being, gold focused, especially in the cycle, and letting partners fund what we would deem would be more riskier exploration, but retaining upside.
In the meantime, though, given where the market is right now, I don't assume you'd go looking for other assets to add to that part of the business. And again, I'm assuming here, so correct me if I'm wrong, but I would assume you're pretty happy with what you've got right now.
Absolutely. We don't, acquiring other assets and issuing more stock, could be, would be dilutive. And we really have belief in our two assets. We've got that dual jurisdiction, that optionality across Goldfields, Mexico. I think it's a really good mix of having of our value, just $40 million being underpinned by a robust development project in Saskatchewan with, resource expansion potential. That's really going to limit downside risk for us, but there's huge upside in Mexico. So we've got a nice spread of risk there. If you look at us on a EV per ounce basis relative to peers with just Goldfields alone, we undervalued with respect to peers. You add in, a current resource perhaps coming out of Mexico soon, we get even cheaper. So we've got a lot of potential there. We're not at this stage we would acquire something, but should we, ultimately monetize or opportunities arise in future, depending on the situation, we will look to acquire more assets over time. And if gold's still the market's right and the cycle's right, we'll look to bring in more gold assets, or it could be other commodities. But our whole business model is going to be around, hybrid, so a hybrid model of project generation, low cost acquisitions that we'll look to partner fund that are earlier stage, perhaps more risky, but then also acquisitions of slightly more advanced assets that we might look to fund where we deem exploration, resource expansion a little less risky and can move it up the Lassonde curve a little quicker. So we're a bit of a hybrid type model, but we've got a long-term vision to create real value in this business. And, we've got the team, we believe, to execute on that.
On the topic of issuing shares and therefore money, 1.7 million in June, which means you're now at about what 1.5 million in Kitty?
Yeah, and on the cash side, we're probably a little bit lower than that, around, obviously incurring some costs now as we execute on our catalyst, being the PEA at Goldfields and some of the permitting work that's been done there, as well as some expense in Mexico. So sitting around $1.3 million in cash.
How much money are you going to need to go through those catalysts that you're talking about here? Essentially, redoing the study as well as the new in Mexico, as well as the PEA in Canada.
Yeah, so that's all fully funded through that 1.3 million remaining. And just to recap there, it's the updated PEA for Goldfields. It's the initial phase of permitting, including environmental and community work at Goldfields. And then in Mexico, reaching access agreements and some initial exploration in the form of soil sampling, and then completing a current 43-101 for that project. So, the $1.3 million remaining will cover all of those assets. They're going to be key near-term assets, through the remainder of this year. We believe we'll have the opportunity to re-rate the stock, and then we'll obviously look to raise for the next phase of work, which we're currently planning out.
Well, talk to me more about the strategy for raising capital going forward, both from the perspective of the when as well as the how. When, in terms of, like, I understand you're fully funded for these couple of milestones that you want to complete here. Of course, you don't want to be running on fumes and raising capital in that case. That's the when part. But also, are you considering, I don't know, a JV? Is there room for, I don't know, another royalty on Goldfields, or I don't know, a stream, or something else entirely? Or do you think equity raises will be the way to go for it?
Yeah, I think provided the share price is right, I think equity raises will be how we fund things, but we'll remain open to transactions, whatever makes best sense for shareholders, really. So there's a lot of interest in what we're doing, and we do talk to people, of course, as part of our business from time to time. So we will continue to look at opportunities, but for the foreseeable future, we would certainly want to self-fund to retain the value we believe that can be unlocked through these assets before allowing, partnering out too soon. So, I think the 100% ownership for us is key now because we believe we're significantly undervalued and there's a lot of value to be unlocked.
What about G&A in that process? I mentioned at the beginning, the last 6 months was about $75,000 to $80,000, I believe, it's somewhere here in my notes. But is that where you think it's going to stay, or is it going to go up a little bit now that I assume you're going to be marketing more and all that? So yeah, what do you think that's going to be?
Yeah, look, we are doing some. I mean, we haven't. I think you pointed out in the beginning, we haven't marketed a lot. We don't. When the market's not right, we don't believe to spend a lot of money on marketing, because it falls on kind of deaf ears. I think you see a lot of people do that. But we've seen the cycle ramp up. We think in the early to mid stages of a gold bull cycle, a lot of the big banks are predicting that. So we see the potential now to sort of come out from under the radar and start some more aggressive marketing campaigns, which we'll do through the fall and alongside these catalysts at the moment. But in terms of the broader G&A, we are we lean and mean. From the comparisons I've seen, we're a pretty small tight team. We like to operate things on a more of a turnkey basis because in this exploration game, things change quickly, right? And you don't want to be carrying lots of overheads when the market conditions are right. So we tend to structure things like that. It's primarily myself and Gareth who run the real technical side, and then we work with contractors and people aligned with the company outside of that. But we'll look to probably add some key personnel over time here to help with the development work certainly at Goldfields, and then as well as also building that longer term pipeline I mentioned to you through future acquisitions and lower cost acquisitions as well, to build up that real pipeline for our business model.
Is there a fixed budget that you currently have for marketing, or how much money are you looking to spend?
Yeah, so we announced across our as per required, we announced the marketing initiatives we have planned for the fall here. So it's just over around $250,000 worth of marketing. Which is it's a good but modest budget, and we're fortunate to work with someone who's got a lot of experience in the marketing IR thing. So we've picked our campaigns very carefully. Compliments to you, Antonio. So so yeah, great to be talking to you about all this stuff. But yeah, obviously got a few other third parties helping us with our outreach and really getting the story out.
Well, that's exactly what I was going to say. Is like, are you sure you picked your partners correctly? Because you're doing this with me, so maybe jokes aside, though, shout out to Fiona put us in touch. So shout out to her. She's done a good job.
Yeah, absolutely.
Talk to me about the marketing that you don't see being necessarily disclosed because it's you doing the legwork. Essentially, you going and knocking on doors. How do you see that part of the marketing? Whose ear do you have? Whose door are you going to be knocking on? Who's really receptive to the story right now?
We early days, so it's we're seeing I've noticed calls are picking up. My phone's ringing. Obviously, our stock price has ticked up quite nicely, but the rallies, trading volumes are still quite low. So we've got to broaden that outreach. We've got a plan in place, some select conference or two later this year. Obviously, there's the slew of conferences early next year, which we'll hand select, and as well as post our Goldfields PEA, knocking on a few key doors of some of the more institutional investors in the space. I think that's a key part of our story. We largely retail, high net worth sort of retail focused ownership at this stage. So I think it'll be key to bring in some institutional ownership and try to get some analyst coverage for the company, in the near term.
What do you think is going to resonate with them the most, or how do you think you're going to be packaging the message with, again, uranium and gold and porphyry, copper, whatever? How are you going to package that in an investor friendly way that everyone can understand and hopefully value properly? Because again, you and I have had about just looking at the clock, it's almost, an hour and 15 minutes, call it here. And I'm starting to get a decent understanding of how it is, but not everyone, gives you an hour and 15 minutes or an hour and a half of their time. So how do you pitch someone in an elevator?
Yeah, so really, we're a gold focused company. We have across our two projects around 3 million ounces in drill defined resources. We're unlocking those. In the background, we have upside and optionality on uranium projects that are being partner funded, that are non-dilutive, and that contribute to our G&A. Our value is really underpinned by Goldfields in Saskatchewan, a robust development asset. And if you move to Mexico, a historical resource, but significant exploration upside through gold as well as a deeper copper gold porphyry system.
Short elevator ride. I appreciate that. What keeps you up at night, Dale? I'm about to start closing it off here, but nothing's ever perfect, I suppose. What keeps you up at night?
Yeah, a lot of it's the details around. We're busy, and we covering a lot of areas with a small team. Across from community relations to permitting to expert technical planning. So these are all things that factor into the thinking, but generally I'm excited. We're all very excited about where things are going. There's the normal day-to-day stresses. Certainly a while back it was money because markets were tight. We weren't raising a lot of money. We didn't want to be dilutive. We kept ourselves busy and funded through some of the uranium work. Nowadays that's, I think, less of a worry. The market's improving, so that's sort of that worry is lifted largely. I think there'll be money around for companies like us. So really the day-to-day concerns around but logistical planning, and doing the right things step in step. Certainly the community side is really key across any project you work in nowadays. Whether it's Chiapas or Saskatchewan. And we need to operate responsibly, sustainably. We need to build proper relationships there, and that requires thought, right? It's and I think extra thought for a guy like me who's a geologist at heart.
Well, I really do appreciate the conversation. I think I've been through most of my sort of introduction questions. Again, we have a couple of interviews that we're going to be doing, hopefully sometime soon when you have the PEA out, hopefully again by the end of the month. What do you think I'm forgetting to ask you? What did you come here hoping to talk about that I failed to bring up?
I think that was great, Antonio. I appreciate all the questions, and I think it's a great intro session for us, and I think it's hopefully given everyone a good flavor of who we are and where we want to go as a company.
Awesome. Well, thank you so much for doing this. Bedankt voor uw tijd. I appreciate you stopping by, and hopefully we'll do this again soon.
Excellent. Thanks a lot, Antonio.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there, so it is safer for you anytime you're watching any type of company-specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias, again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."